Welcome to Investors Guide. This is our Diwali special episode. Thank you for joining us. Happy Diwali to you and your family at home. I'm so glad you tuned in this weekend. We have a lovely special show planned for you. As always, on Diwali, we're focusing on gold. We're going to find out if the rules of investing in gold have changed over the last 1 year and if you should be changing your strategy as well. Joining me in the studio to help us answer all of the questions you sent in during the week, Vishal Kapoor of Standard Chartered. I'm not going to introduce you because everybody on this show knows who you are so far. You've been with us for 5 years. We have Ram, who joins us from Anand Rathi Commodities, who's an expert on gold and is going to tell us whether or not we should be buying gold this Diwali and in what form we should be buying gold. And of course, just like Vishal, joining us every year on this show and every week is Kumar, the CEO of Value Research, our mutual fund expert. Dhirendra, happy Diwali to you in Delhi and thank you for joining us. Gentlemen, happy Diwali to each of you as well. We're going to start by talking about gold because, as always, as Indians, we're interested in gold. We want to know if we should be going out and buying it. Interesting part about gold right now is that we pay a premium, and our audience should know this. We pay a premium of 15% on the price of gold in India, as opposed to what it is overseas. And that's because of an extra import duty that we pay, because there are curbs on import of gold right now, which means there's a scarcity that's been artificially created in our market. Ram, I want to come to you first. Before I ask you where you see the price going, we know that this import duty was brought in because of the difference between the rupee and the dollar some time ago. Now the rupee seems to have eased off. Will the import duty come back down again? And in that means, does it make sense for us to buy gold?
Yes. At the moment, if you see, the market is trading around, say, around 30,000 plus. Looks like on a near future, it's likely to come down to around 29,500 to 29,000 if the import duty reduced to, say, at least 50% of at the moment what it is. And rupee plays a very important role in a domestic market. Rupee is hovering around 61 to 61 and a half at the moment. If rupee comes down to around 59 to 58 level, the gold prices can come down to around 29,000 to 28,500, and that is a good level to invest at the...
Okay, so I'm going to make this very simple because our audience are all retail investors, just so we can understand it. If your family or your wife wants to buy gold this Diwali, are you going to say yes?
Yes.
And do you think it's a good idea?
Yes, I definitely, at least 5% of the total invest in what I'm investing in mutual fund or in equities. I will definitely 5 to 10% and invest in the gold, but not at a lump sum. I will invest in a 20%, 30% and 50% like
okay.
that.
So you're saying it still makes sense, but spread it out, don't do it all. So just the token investment this Diwali then, that's what you're giving us the go-ahead for. Vishal, like we were talking about, the rules to investing in gold have changed. We're paying an inflated price in India right now.
That's right.
Are you telling your clients to buy gold at this point?
There are two parts to gold. One is, of course, what we use for personal consumption. So we leave that out completely because that is a personal choice, jewelry, or for tradition reasons, we buy gold at Diwali or around Diwali. Now, from a portfolio standpoint, there is a place for gold in a portfolio, but I just want our customers to be cautious about being overweight. Because maybe what has happened is that because gold has had such a great secular bull run over many years, people may have gone overweight. Also, when you revalue your gold holdings to current prices, you may be overweight.
Right.
So it may not make sense definitely to add. It may make sense to rebalance.
You're actually telling us to take a look at how much gold we have in our portfolio, and if there's too much, and what is too much? More than 5% is too much?
That really depends, but generally more than 5 to 6%, I would say, what's really the reasons to have so much gold.
All right, so more than 5 to 6%, I should actually be selling gold at this point because of that premium.
You should rebalance.
Dhirendra, I'm going to bring you in. Now, I know you have very, very strong views on gold. You've always had them, and they've gotten stronger over the last couple of months. For those of our viewers who have taken your advice and who've been investing in ETFs perhaps for a wedding that's going to happen in the future, is that something you continue to recommend, or do you now believe that even ETFs should completely be written out of our portfolios?
Yeah, all these things, I completely disagree with, this whole allocation principle that it should be some part of our portfolio. The core of our asset should be, equity and debt, and you can do without gold, without looking at gold as an asset class to be part of your investment portfolio. Yes, if you want to accumulate savings in gold to be exchanged for real gold at a future date, maybe this averaging could be advantageous. The ups and downs, I think people should look at it as it's part of our customs, and you need gold for all the customary things. So if you are accumulating savings to be exchanged for real gold, that is the only utility. Else keep away from it. One will be better off with as normalcy getting restored in the marketplace. For equity and debt, I think one will be better off with real asset classes.
All right, we have a question from one of our viewers that came in, and this is a young man called Vicky who's written in, who tells us he has 30,000 rupees to spare every month, and he'd like to allocate that money across mutual funds. He also wants to know if he should opt for a gold mutual fund or the gold Bs as an investment.
We have to speak to him and assess what he's comfortable with and what his time horizon is. But as a young person who may have this money for the long term, we think that it's likely he will want a more aggressive sort of a profile than an RD or gold may give him. So therefore, a balanced to an aggressive sort of allocation would probably work best for him.
Dhirendra, I'm going to bring you in here. Vishal says he should possibly take a balanced approach. And we know from the look of his question, and so many similar questions we've seen in the past, that he's probably a first-time investor. So do you also recommend he avoids gold entirely, and can you give him one balanced fund that he can use to get started?
Yes, he can pick funds from our stable growth portfolio, which is a collection of four equally investment in four balanced funds. But if I have to list one or two, I would say the Edelweiss Absolute Return Fund or ICICI Prudential Equity Volatility Advantage Fund. Both are balanced fund by their allocation, and a good fund and a very conservative fund, even among balanced fund, for somebody to get started.
All right, on your screen right now, two balanced funds that you can use if you're a beginner. And a quick recap of what we've learned so far. Our guests seem to agree that you need to re-look at your portfolio. If you have any more than 5% is what Vishal and Ram said we should have in gold, take that money out. Dhirendra seems to think that you should have no gold at all in your portfolio. But the important thing is, buy jewelry this Diwali if you want to. It's not an investment. Do not confuse the two. All right, before I go into break, we have Hemang Jani who's standing by. He has a Diwali gift for all of you. Two stocks that he thinks make sense at this point. Hemang, what should we be investing in?
Well, first of all, wish you all a very happy Diwali and hope New Year brings a lot of happiness and prosperity to all the viewers. My two tips are IDFC and Tech Mahindra. IDFC we like because it is going to be converted into a bank in this January when the new banking licenses are being announced. It has a very top quality management, and the stock is available at about one-time price to book. So we think that this stock can give an appreciation of about 25 to 30% in about 12 months time. And the other tip that we have is Tech Mahindra. Now Tech Mahindra has become fourth largest IT company in the country, and given the improvement in the balance sheet and its domain expertise, we think that there is a scope for significant growth in terms of revenue, and this stock is available at about 12 to 13 times price to earning next year. So this is one good quality stock that viewers can look at investing in.
Now, we had so many questions come in from you over the weeks, and we've picked a couple of lucky viewers. We're going to take a look at their entire portfolios. Our first lucky viewer is Himanshu.
This Diwali is special in the Karnik home. With the addition of a bouncing baby boy, Himanshu and his wife feel their family is now complete. But for these young parents, a growing family also demands better planning of their finances. And the Karniks want to be prepared to realize all of their children's dreams.
I have two boys aged 6.5 years and 6 months, for whom I need to create a corpus for their education and marriage. For the elder one, I need about 40 lakh rupees in 12 years' time, whereas for the younger, I need about 50 lakh rupees in about 18 years' time.
Apart from his children's needs, Himanshu also hopes to have a relaxed and carefree retirement. A comfort he would also like to provide for his parents, who will retire soon.
I also need a corpus of about 1.5 crore for my retirement plans. I would like to know from you whether to invest in gold, equities or any other instrument that you deem fit. Thank you.
All right, so that was Himanshu. Vishal, I'm going to come to you first because he had a very interesting question about insurance. Let's first take a look at his insurance needs. He's going to have to support his parents. Both of them are senior citizens. Plus, he wants more medical insurance for himself. Does it make sense at all for him to start a portfolio without medical insurance?
No, so he definitely needs medical insurance for all dependents and himself. Now what we saw was that he's got some insurance for himself, but not for his parents, not for the rest of his family. So he needs to cover that first. Now, unfortunately, the insurance for his parents may be a bit expensive, but it's really well worth it as well.
Well, if you're talking about insurance, let's also talk about his term plan. He has about 50 lakh rupees now. Given what we've seen from the rest of this question, is that enough? And also, the ULIP that he's putting money aside, 15,000 rupees a month, does that make sense?
For the term insurance for himself, it does look a bit low. I think we could safely look at him doubling it, because it should at least be 10 times his annual income, and what we've seen is he may have a better income than that. Now, ULIP, this is an old ULIP plan. It is likely that it may have expenses which are quite heavy. So I would think that if the surrender charges are not very high for this specific plan, he could look at actually terminating it. He does not lose a lot at this point, but he could redeploy it into a pure investment, because that's what the purpose of this ULIP seems to be.
Well, Dhirendra, I want to bring you in here. He's saving 20,000 rupees a month, and he has fairly high goals. He wants to save for the future of both of his children and his own retirement, nearly 2 crore rupees over the next 15 to 20 years. He might not be saving enough, but can you start him off on a plan right now?
Yeah, I would say that, it may not look enough. And I think, he's very conservative in his estimation. His estimates for the education need for his child 10 years away or 16 years away, it might be, it might be much more. Likewise, his retirement goals and accumulating 1 crore for that may not be enough to generate income for him. But I would say that, he should think in terms of starting with 20,000 rupee and, on board our aggressive growth plan, and that is a chance he has to take. But our aggressive growth plan is also 10% fixed income, 90% equity, and a fairly diverse equity. And try and increase your savings or increase your investment amount.
All right, Himanshu, we hope that helps. Now remember, you can write back to us if you have any more questions about the advice you heard on the show. Let's take another very quick question from one of our viewers.
Happy Diwali to all of you. I have a savings of around 35,000 per month. I have already invested into mutual fund of around 3,50,000. I need to purchase a home in Bangalore Whitefield area costing around 35 lakhs, for which I need to make a corpus around 7 lakhs rupees. I'll be getting married by 2015, for which I need to purchase a gold of 2 lakhs rupees. So can you guide me on meeting both of these objectives?
All right, that was young 26-year-old Tejas K. Very interesting. Dhirendra, first of all, I want to come straight to the point. The most interesting part about his question, he's planning for a wedding in the next 2 years. He already has a child plan in his portfolio, but he tells us he bought it because someone told him it will make a lot of money for him, and it did. He wants to know if he should pull his money out. So take a look at his mutual fund so far. A, should he pull his money out of that child plan, and what would you like him to do with the rest of those funds?
I would say that yes, he should consider, because it's it's not an all equity fund, and the kind of time he has, he should feel happy about this investment working. But he should try and develop a saving strategy, or a savings plan, which he should follow. And the best way of doing it is consider one of our portfolio, or consider 1 or 2 funds, invest regularly, depending on what he's comfortable with. Is extremely risk averse. Wants far very stable return from a fixed equity portfolio. One thing is that you can't do without equity when you're investing for the long run. And from that standpoint, our stable growth portfolio is the safest. Then our growth portfolio, which is 80-20, 80% into equity and relatively stodgy equity funds.
2 choices there, depending on what sort of investor you are. If you want to go the safer way, use our stable growth portfolio. Ram, here is a young man, 26 years old, planning for a wedding in the next 2 years, being nice enough to his future wife to put money aside for the gold that he's going to have to buy. So he has a 2-year target. He wants to buy 2 lakh rupees worth of gold. What is the best way to put that money aside? Is it through a gold ETF, a mutual fund? Is there a particular ETF that you'd like to recommend to him?
The gold ETF, definitely it is a good idea, or he can go for gold Bs also. In fact, it has gone up to almost 3,000 plus, and now it is correcting. It's around 2,900 level. Looks like it is likely to correct further. So say around by end of this December, if rupee remains stable and gold comes down to almost 1,250 or 1,200 level on international market, you might get around 24,000 to 25,000, say around 26 to 27 at least, that kind of a level she'll get. That is a good investment because definitely he has to buy some gold for his wife. So at that time he can definitely invest in.
We hope that helps, Tejas. That's the advice that all of our guests are giving you. And remember, if you have any questions for us, you can send it to us on the email ID that's at the bottom of your screen. Before we go into another break, I have Om Ahuja standing by from Jones Lang LaSalle. He has tips on real estate for you for Diwali this year. Take a look.
All the viewers wish you a very happy Diwali and a prosperous new year. Diwali always brings joy and great time to look at great options whenever there are great opportunities in the market. In my scheme of things at this point of time, there are two markets which keeps us very attracted. One is Hyderabad, the second one is Bangalore. Hyderabad, specifically the IT city and Madhapur, Gachibowli areas where the valuations are extremely attractive. With political resolution in and around maybe next 12 to 18 months, we should see great upside in Hyderabad. And in terms of Bangalore, specifically Sajapur Road, Outer Ring Road, great opportunities there, great valuations there can bring good upside there. In terms of every city has its own charm, every city has its own good pockets. Investors can go out in the market, look for deals where developers are rolling out offers, specifically when it comes to great offers in and around Diwali. Good discounts not only resulting into special freebies but also basically with regard to taking a checkbook there, getting good discounts, sitting across the table, working out good IRR discounts anywhere ranging between 5 to 20% are the great offers in the market today.
Now our next lucky viewer is Chetan. Take a look.
Little Swara is the apple of a father's eye. And Chetan, like any parent would, wants to make sure his daughter has the very best opportunities laid out for her in the future, which is why he has started planning 2 decades in advance.
I'm investing in gold fund, Birla Sun Life Gold Fund, 1,000 rupees per month for my daughter's wedding. Please let me know my investment is on the right track, or should I diversify more in gold investment? Should I go for gold ETF?
Like most Indian borrowers, Chetan dislikes having a loan hanging over his head. And his second priority is to pay off his home loan as soon as possible.
I have a home loan of 50 lakh rupees. Outstanding principal component is 50 lakh. I want to close my home loan in 6 to 7 years down the line.
And finally, there is the matter of his own retirement. Chetan would like to be completely self-reliant at 60, but the battle with inflation causes him concern.
All right, so that was Chetan's case. Ram, I'm going to come to you first with his question. A wedding in 15 years. He wants to put money aside for gold. So he's currently saving 1,000 rupees every month that he's putting in the Birla Sun Life Gold Fund. Is that the best way to invest in gold for the long term? I know you can't tell us where gold is going to be in 15 years, but what's your advice for an investor like that?
Yeah, he can, whatever he has started investing it, and slowly he can go on investing in ETF as well as the gold fund. Because the amount is very small, so he can invest in different level or something. But overall, he can go ahead and invest in the gold funds. I don't think any problem is there for next 15 years.
All right, so invest in the gold fund. Dhirendra, you seem to have a different view on this. Do you think that if he were to invest possibly in an equity fund or a balanced fund, he'd be able to achieve the same thing or perhaps do better?
Yes, and I think, because he's investing such a small amount, the cost as a proportion of his investment will be nearly 15% if we look at all the hidden cost and all the transparent cost. Let's look at, how the dynamics of gold has changed. One is the customs duty, which is embedded in the Indian gold prices. Besides that, when a mutual fund company has to buy the gold when their investors buy the units, they have to pay VAT. And that also gets embedded. So my sense is that accumulate your savings into equity. For this kind of time frame, I'm very confident that equity, being what it is, and over a 10-year and more period, it has always been able to beat inflation, which on a 10-year basis, gold has never been.
Vishal, you are the tiebreaker at this point. Our guests seem to disagree. Ram says use gold and use gold funds. Dhirendra says use equity. Now for the long term, and you are normally my asset allocation expert, so I'm going to come to you with this. He's also looking at his own retirement. He's looking at his daughter's future and that wedding in the future. For the long term, if he's dividing his money across asset classes, should it be equity? Should there still be a portion in gold, or do you think we don't need to do that anymore?
I would tend to agree more with Dhirendra at the time, because I think the need for his gold is far away. And if it were closer, I would have said, look, start accumulating because it is visible and this is near term. But I would agree, if it's 15 years away, that you really need that physical gold for a specific event, maybe it's too early to start accumulating. And, given the overall market and the potential that equity and other asset classes may have, I think for at least a few more years, he should build up wealth through other assets rather than being in gold.
All right, so you don't have to write gold completely out of your portfolio, but using equity at this particular point of time might be more efficient. The general consensus, of course, is that we will, as Indians, always make that token purchase of gold during Diwali. We're not stopping you there. Just remember that jewelry is not an investment. That brings us to the end of the show. Gentlemen, thank you so much for spending time with us, Diwali. Happy Diwali to you and to your families. Dhirendra in Delhi, it's always a pleasure to have you on this show. Happy Diwali to you as well. Our email ID is at the bottom of your screen. Write to us if you have any questions. It's been 5 Diwalis here with us on Investor's Guide, and we'll continue to hold your hand. We wish you a year full of prosperity. Thanks for watching.